Hello, welcome to a European Open briefing for Thursday, October 25th. I'm Rafi Bayajan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. So the risk-off mood is still there this morning. We saw another big sell-off on Wall Street overnight, and that led to sharp losses in Asia this morning. Though towards the end of the Asian session and heading into the European session, we are seeing a bit of a turnaround. We can see Chinese stocks made a last-minute rebound, closing in positive territory, though the Nikkei in Japan was still down by 3.7%. In Europe, we are seeing only moderate losses this morning, with the exception of the French CAC, which is actually up by 0.4%. Having a look at the major pairs, the dollar index yesterday touched a fresh 2-month high, but was down against the Japanese yen. The yen was broadly stronger yesterday and early Asia, more in Asia trading, though the safe haven yen has eased a little heading into European trading. We can see dollar yen currently slightly up at 112.30. The euro fell sharply yesterday. It's now recovered back above the 1.14 level. And looking at sterling, it's also recovered from yesterday's lows, climbing slightly above the 1.29 handle. Looking at the Australian dollar, it's not doing too bad. It's up by 0.1% at the moment. It's managed to stay above the lows seen from earlier in October. The same holds for the New Zealand dollar, currently trading down by 0.2% at 0.6514. We did have weaker than expected trade numbers out of New Zealand, so that's somewhat weighing on the Kiwi. Looking at the loonie, though, it's extending yesterday's gains following that Bank of Canada rate hike, as well as that hawkish tone, or relatively hawkish tone, in its statement, which has boosted the loonie. Looking at commodities, oil prices down, WTI down by 0.6%, as the risk-off sentiment, the weakening global growth outlook, and now the rising U.S. inventories. We saw another big increase in U.S. inventories this week, so all of that is weighing on oil prices. Gold, though, is off yesterday's highs. It's trading at 1,232, as we're seeing a bit of an easing in that risk-off tone in the markets. And looking at the main performers, euro yen recouping some of yesterday's losses. Same true for pound dollar and euro dollar. At the bottom, Kiwi dollar struggling there, and so are oil prices. Let's now move on to the dollar index. We can see those 2-month highs of 96.53 yesterday. That was mainly on the back of a big slump in the euro and the pound against the yen. The dollar has been trading pretty much range bound, and it briefly dropped to 1-week low of 111.81, though the yen has eased back somewhat this morning. We also saw dollar yen coming under pressure from that big sell-off in Wall Street. We saw Dow Jones, S&P closing down sharply and erasing all their yearly gains, year-to-date gains. The Nasdaq dropping by more than 4%. So although we are seeing most US companies reporting strong earnings and even record earnings for the third quarter, a lot of them have lowered their forecast for the fourth quarter. So that's weighing on share price, as well as we've got those number of risks weighing on the market, such as the continued trade tensions between the US and China, and potential impact on global growth. We're already seeing signs of Chinese economic slowdown. We've got Brexit. We also have that standoff between Italy and the European Commission. We're seeing signs of a slowdown in Europe now as well, and now, of course, the slide in that weakening outlook for the fourth quarter, signs that perhaps that tax cut effects are fading away. So all of that is weighing heavily on US stocks at the moment. We also did see negative housing data yesterday. New home sales dropped to a 2-year low. in September. So that suggests that the rising interest rates in the US is perhaps starting to hurt demand for housing in the United States, and potentially could expand to other sectors of the economy as the Fed continues to raise interest rates. Let's now take a look at the euro and the pound. You can see both pretty much on a downward path since the middle of October. We can see both, though, rebounding from yesterday's lows late yesterday, early this morning. The euro fell to 2-month low 1.1377 against the US dollar. That was on the following the release of the Eurozone flash PMIs for October, which showed the composite PMI dropping to a more than 2-year low. We also had that ongoing concerns about Italy's budget after the European Commission rejected it, and Italy's government is not looking ready like it wants to compromise. So we could see a prolonged standoff surrounding that, and that could further push up the yield spread between Italian and German government bond yields, and that, of course, would weigh on the euro. And for sterling, there was some good news for Theresa May yesterday, as when she met party members, she actually received a show of support from them rather than criticism of a Brexit strategy. So this has now eased concerns of an imminent threat to her leadership, though overall we still have a lot of uncertainty regarding the direction of the Brexit negotiations, and sterling, in addition to all the other all the other negativity in the markets, that drove sterling to a 7-week low of 1.2865 against the US dollar yesterday. Looking at finally at the Canadian dollar, we can see that big surge there for the loonie, leading to a big drop for USD CAD. We saw the loonie jumping to 1-week high 1.2965. The rate hike by the Bank of Canada by 0.25 percentage points was expected, but in addition to that, the Bank of Canada did remove the term gradual from its statement, suggesting that perhaps rates could start to rise at a faster pace than they have been for the past couple of years or so, 1.5 years or so, and although the Governor Stephen Powell did say in his press conference that the removal of the term gradual could also mean a slower pace rather than just faster, despite that the loonie has benefited from that. And looking at what's coming up later in the day, we're going to have the ECB meeting at 11:45. That's the ECB decision at 11:45, and press conference by Mario Draghi at 12:30 GMT. And plus, we're going to have durable goods out of the US. That's it for me. Thank you very much for watching, and have a great day.